Hello friends, let's start with the ABM 9th chapter, GDP concept. So based on that we will discuss MCQ, case study plus problems. Okay, so see the first question. So here we are starting with the case study. Okay, so that you will be familiar with the case study. So friends, see, based on the information of the financial year, the solve the following questions. So what data they have given, see here. They have given the market value of all finished goods and services made within country during the 19 and 20. They have given the current, at a current price they have given 12,000. What do you mean by these? These all the sentence is nothing but the GDP. So basically they have given GDP at a current price 12,000. Next, for a base year 2001 and 2011 and 12, they have given at a price 6,000. Okay, at a 2011-12, that is base price, they have given 6,000. Government tax they have given, subsidies, import export, net receivable from the abroad, consumption, investment and spending. That much of data they have given. So based on that, we have to discuss the one important case study. So see, first question in the case study, the GDP, the gross domestic product for the year 1920 at a constant price is. So what is the, they are asking GDP at a constant price. Okay, so friends, remember here the GDP at a constant price is nothing but the GDP at a base price. Okay, so constant price is nothing but your base price. Always remember, GDP at a constant price is calculated at GDP at a base price. Okay, so they are asking GDP at a constant price. So see in the data what they have given. They have given the base year as a 2011 and 12, and for that the GDP value they have given 6,000. That means the all the market value, that is the market value of all the final goods and services produced within a territory, that is within a boundary of a country during the year 1920. Okay, they have given at a current price 12,000, and for the base price they have given 6,000. That means this is the GDP at a constant price. Okay, so 6,000 will be our answer. So see the options they have given. How they will try to confuse. They have given this GDP at a current price, at a current price. Okay, and this is the GDP at a base price is nothing but the GDP at the constant price. Okay, so 6,000 you have to mark as the correct option. Okay, now question number 2. See, the same table we have to use for the second question also. The same data we are using. Okay, now so see the question, second question, the gross national income. The gross national income, write down in a capital letter, that is GNI. Okay, next, at a market price, at a market price for 1920 is. So friends, see here, basically they are asking the gross national income. See what I am saying. They are asking gross national income. See, focus on the words gross. What do you mean by gross? Gross means we can say all. Okay, and income, we all know what is the income. So basically the gross national income is the income from all sources. I am telling you a trick, right? From all sources we have to find the income from the all sources. So see here, what do you mean by gross national income? See, the GNI, that is gross national income, is nothing but the total income we have to consider, right? So definitely it will be a GDP plus taxes. How taxes is income? Whatever the taxes you have paid to the government, you are paying from your pocket. So definitely taxes will be added. Next thing is the subsidy. You are taking subsidy from the government. So subsidy you have to subtract. Subsidy is not your income. That's why you are subtracting. Definitely your exporting is your income. So add it. Import is you have to subtract because you are paying for that. Right, and next is the net receivable from abroad on account of a property and the compensation of employee. Just remember the net receivable. Whatever you receive will be your income. Okay, so basic funda, what you have to remember, when they ask gross national income, you have to consider, in short, all income, okay. So based on that, we come to know GNI is nothing but the GDP. Taxes that you have paid to the government is also your income, but government gives subsidy, that is not your income. So plus taxes minus subsidy plus export minus import plus net receivable, okay. So this is the funda. Now just put the values. See here, now GDP at a market price for 1920 we are calculating, so GDP value is 12,000, okay. Next, government tax is 300, so we have to add the taxes, because that is the part of our income we are paying to the government. Then subtract the subsidies, right? Then subtract the import, and now we have to add the export, and whatever the net receivable from the abroad is a part of income, so add it. So based on that, just put the values, put the values, you will get 12,000 plus your this is your tax, this is your subsidy, plus your export and import plus a net receivable, okay. When you solve this, you will get 11,950. So what you will mark as option? Option number 1 will be our correct, okay. Now we will move to the next question, question number 3. See, for question number 3 also we have to use the same data, okay. We have to use the same data. Now see the question number 3, what they are asking: what is the amount of gross national product? What is the amount of gross national product for 1920, for 19 and 20? So friends, what do you mean by gross national product? Okay, we have to find the gross national product. So friends, see here, basically what we know, the basic thing, that is a GDP we know, and from that we can calculate GNP, okay. See the relationship, this is gross, this is gross, this is product, this is also product, but this is the domestic and this is the national, this is the national. That means we have to find the gross national product, that is N we have to find. So we have to find the product of the nationals. Here is the important, is the nationality, here is the important, is the nationality, okay. See here, we have to find gross national product, and we have GDP, okay. So we have to find the, we have GDP and we have to find the gross national product, okay. See here, this is the gross national product and this is the gross domestic product. So we have to find the nationals income, that means basically nationality income we have to find. So what we will do, see, we know the nationality, that means the whatever the gross domestic product we are having, we have to adjust the net receivable, So basically the gross national product is nothing but your GDP plus we are talking about the nationality. That's why we have to all the income, that is a net receivable from the abroad. Why? Because whatever we are receiving from the abroad is nothing but the on account of property. Means suppose one person is having property in the USA, he will receive some rent, so it will be the income of an Indian person. So we are talking about the nationality, so we have to add that. Again the employee compensation, that means suppose the employee worked there and got compensation after coming to India, okay. So here what basic I want to tell you, see, the gross national product is nothing but here nationality, we are assuming the nationality from gross domestic product instead of domestic means what? Suppose this is India, whatever you produce in India, this will be your GDP, okay, because it is within the territory. And a gross national product is nothing but the all the value that here in a GNP nationality is important. That means all the persons who are Indian, we don't care where they are staying. If they are Indians and they are something producing, earning, we will count in the GNP, Okay, so remember, very easy, that is very easy, just write in the capital. For example, GNP we have to find from the GDP, because we are having the GDP value here. So how to find? We want the nationality, that means nationality is considered. That's why GNP is equal to GDP plus net receivable from abroad on account of a property or a compensation. Okay, just remember net receivable, NR, net receivable. So when you add this, you will get 12,000 plus 50, you will get 12,050. Okay, very easy. Now next question, question number 4. The same data, we have to use the same data. Okay, so I am not going to explain that data, but see the fourth question, it is also very easy question. See, if expenditure method is used to calculate the GDP from the given information, it will be. So basically we have to find the GDP at expenditure method. So what is the formula for the expenditure method? It is a C plus I plus G, C plus I plus G, plus you have to plus export minus import. Okay, this is very easy and basic formula for the expenditure method. We know there are three basic methods to calculate to find the GDP, right? So one of them is the GDP at expenditure method, and the formula for that, remember here, C plus I plus G plus export minus import. Okay, plus export minus import. So very easy. What they have given, C plus I plus G. See in the table, see in the table they have given what is C, right? C means consumption, C for consumption, I for investment, and G for government spending. So add C plus I plus G, you will get 8 and 5 12,000, right? So 13,000 you will get here, right? And then we have to subtract the, add the export and subtract the import. So here is the difference, minus 300. So when you subtract 300 from 13,000, you will get 12,700. So how easy it is. See, just remember the formula for the expenditure method, C plus I plus G, that is consumption, investment, any government spending, plus export minus import. Very easy formula. Orally you can solve this type of numerical, and generally IIBF is asking only the expenditure wise method based formula and that based examples. Okay, so I repeat here, remember the formula for expenditure method, it is a C plus I plus G plus export minus import. Okay, that is very easy. Now, so I think we have completed the first case study. Now, which of the following, next question number 5, which of the following type of GDP is more effective for the economic growth from the government's perspective? That means they are asking what a government think that which GDP is more reflective. So first option, current GDP, nominal GDP, real GDP, none of the above. So friends, correct answer here is the real GDP. Why real GDP is more reflective? Because real GDP considers with the inflation. That means real GDP is calculated considering the inflation. That's why real GDP is more reflective. And a nominal GDP not consider the inflation, And always remember, the nominal GDP is calculated at the current price, right? Nominal GDP always calculated at the current price. Okay, now next question, question number 6, which how is the GDP per capita of an economy obtained from total GDP and the population of the economy? Okay, that means basically they are asking how the GDP per capita is calculated, per capita. Okay, so here is the itself in the question, it is answer by adding 2, no, by dividing the GDP by the population. Yes, it is correct, GDP per capita, that means GDP divided by population. Okay, so second option is correct. By subtracting is not correct, by multiplying is also not correct. So it is very easy question, name itself, it is a self-explanatory. Now question number 7, in the production method, by what is the GDP measured? we know there are different methods to calculate the GDP. One of them is expenditure wise, second is income wise, and third is production method. Okay, remember that three methods: expenditure method, income wise method, and production method. Okay, so that are three methods to find the GDP. Here they are asking, in the production method, what is the GDP measured? By what GDP is measured? First option, output, expenditure, income, demand. Income, obviously you can say no, expenditure is expenditure wise, demand is not. So important thing is that output. That means by production method, what is your output and how much amount you are producing, that is the basic measure to find the GDP at the production method. Okay, so here you have to mark the correct option as the output. Okay, remember production method, output is considered. Okay, in case of production GDP. Okay, now question number 7 we have completed. Question number 8 now. See, as per the IMF 2019 estimates, what is the position of Indian economy in the world by GDP? So basically, recently in 2019, the IMF has released data regarding the GDP. So we know our India is the 5th largest in the world. Our India's GDP is the 5th largest. Okay, and also remember there is a chances that they can ask this type of question, because 0.5 marks they can ask. Okay, because it is upgraded, right? So that's why remember our economy is the 5th largest. Okay, now question number 9. When are the GDP quarterly estimates published? That means they are asking when GDP is calculated on quarterly basis, when it will be published. When the GDP quarterly estimates published? First option, with a lag of 1 month. Second, the last working day of the quarter. Third, with a lag of 2 months. And fourth, at the end of next quarter. So friends, correct option here is the with the lag of 2 months. Why they are lagging? Because to compute data they need some time. That's why after completing, suppose this is the January, February and March, and then April and May. So by the end of the May, that means after the completing the quarter, in the second month they will publish the data. That means by lagging the 2 months. Okay, so and when on the last working day, of the by lagging 2 months. That means after 2 months on the last working day of a second month. Okay, remember this point also, last working day of the second month. Okay, question number 10. What is the purpose of the base year of the national accounts in the GDP? So what is the purpose of base year? What is the purpose of base year? We know the GDP calculation, right? It is at a current year or it may be at a base year. Why base year is important? First option, it is IMF requirement. No, for inter-year comparison. All countries do this, that's why we are doing. This is no purpose, this is no. So basically because to compare, why we take a base, why do we take a base year? To compare, it is very simple to compare. Okay, so it is very easy. So here you have to mark the for the comparison purpose, Okay, now the question number 11. GDP deflator are price indices which used to calculate dash level of a GDP. So remember friends, what do you mean by GDP deflator? GDP deflator is also important because it also consider the inflation. Remember. And what do you mean by GDP deflator? It is nothing but the GDP at nominal price divided by GDP at a base year price and multiplied by 100. Okay, this formula you have to remember, because they can ask a MCQ, 1 mark MCQ based on that formula. GDP deflator is nothing but the GDP at nominal price divided by GDP at a base price multiplied by 100. Okay, so what you will mark here, because GDP deflator considers the inflation. First option, cost adjusted. Second, price adjusted. Third, inflation adjusted. So for the profit adjusted, you have to mark the inflation adjusted. Now question number 12. What is the name of a new data series which is much more comprehensive, being used for compilation of data for GDP in India? So what we are using, basically what we are using for GDP compilation? First option GVA, second GDP deflator, third MCA 21, fourth none. So friends, correct option here we are using in India is the MCA 21. What is MCA 21? It is a Ministry of Corporate Affairs. It is the Ministry of Corporate Affairs guidelines, something that is a, just remember the full form also, don't need to remember basically, but for your information, MCA stands for Ministry of Corporate Affairs, okay, and MIC 21 we are using for calculation of the GDP in India, okay. We will not go in detail how MIC guidelines and that. Just remember that MIC 21 is used for GDP calculation in India, and MIC stands for the Ministry of Corporate Affairs. Ministry of Corporate Affairs. Okay. Now, question number 13. What serve as a more realistic proxy to measure changes in the aggregate value of goods and services produced in the country? So, it is also very, very important. This is the most important. Why? They are asking what serve as the more realistic proxy to measure changes in the aggregate value of goods and services produced in the country. That means they are basically asking which of the following is more realistic, okay. So friends, first option GVA, GDP, national income, GDP per capita. So remember friends, GVA, that is a gross value added. This is the gross value added. This is the most realistic. Why? Because in GDP we don't know the exact, that means it is just a boundary. We are calculating the goods and services to be produced within a boundary, right? Here we are not considering the taxes and we are not considering the subsidy in the GDP. But in case of GVA, we consider, that is a G, the formula is GDP. Here we add the taxes and we subtract the subsidies, okay, in GVA, because taxes are paid to the government, so that is our income, and subsidy is given by the government to us, so we will subtract because this is not our income. So we have to find the exact output. That's why GVA is more important, because here we consider the taxes and the subsidies, okay. So remember, just remember here that in GVA we consider taxes plus subsidies, but in GDP tax and subsidies are not considered. The national income and GDP per capita doesn't give the exact information about the individual income also, and also GDP is not considering taxes, GDP per capita is not considering the taxes and subsidies. So why we have to mark a GVA? Because it is the most realistic, because it considers the taxes plus subsidies, okay. So just remember that. Now the question number 14. When GDP is calculated on the basis of a value of goods and services at price of the given year, it is called as. So basically they are asking the GDP at a given year. So it is very easy. First option factor cost, GDP at a market price, GDP at a constant price, GDP at a current price. The given year, that means a current year basically, remember. So we will mark GDP at a current price. It is very easy, nothing to explain in this. Now question number 15. Yeah, this is a good question. See, which of the following describes the term gross domestic product properly? So we have to find GDP definition properly, okay. Now see what they have given. They have given the 4 definition. Out of that we have to choose the correct, okay. Now see, first they are saying the market value of the goods and services, the market value of the all goods and services produced within a territorial boundary of a country during a period of 1 year, okay. First option they have given. Next, the market value of all final goods and services produced by citizen of a country during the period of 1 year, okay. Next, market value of the all goods and services produced by citizens of the country during the 1 year. And market value of all final goods and services produced within a territorial boundary during a period of 1 year. So friends, see here, second option here it is wrong. Why? Because they are saying GDP by citizens of a country. So GDP is not considering the citizenship. Okay, because we are GDP, name itself, it is a gross domestic product. Domestic, that means we are assuming the boundary. See, anything which is produced within that boundary, we are not taking care of who is producer, whether Indian or foreigner. In India, anybody can produce, that will be counted in the GDP. So by citizen of India, it is not correct. By citizen of India, it is also not correct. Okay, so see the last option, market value of all the final goods and services. See first option, why it is not correct? In the first option, or market value of all goods and services. But here the important thing that in a GDP we only consider the final goods. Final goods means that are ready to sell. Okay, here the final word is missing, that's why this is not correct. And in the last option, it is the most correct, that it is the market value of all final goods and services produced within a territorial boundary during a period, say 1 year. So you have to mark, see how the question can be framed. So most wisely you have to read the question and mark last option as the correct option. I repeat here, GDP stands for market value of all final goods and services produced within a territorial boundary during a defined period, say 1 year. Okay, now question number 16. GDP is equal to consumption plus gross investment plus government spending plus export minus import as per which of the following method? In the very first case study, we discussed that according to the expenditure wise method, it stands for C plus I plus G plus export minus import. So basically this is the formula for the expenditure wise method. Okay, very easy. Now question number 17, the personal consumption expenditure on household divided into. So friends, see, remember, whatever the expenditure on a household is divided into, first option durable, second non-durable, third services, and fourth all. So correct option here is the all of the above. How? See friends, the expenditure on the household item is divided into, first it is divided into durable, then it is a non-durable, and again it is it is service. Okay, so what do you mean by, see here, what do you mean by durable goods, what do you mean by durable goods, or what do you mean by non-durable goods? So durable goods are the goods which last for more than 3 years. For example, TV, fridge. Okay, this is the durable good. What are the non-durable goods? For example, cosmetics, petrol, right? These are the non-durable goods. Okay, clear? Now the durable, non-durable service, all of the above. Now question number 18, the NDP. Question number 18, NDP. See friends, the net domestic product stands for, they are asking basically a formula. So see friends, we have to find the NDP. Okay, and they have given the NNP here. So just relate with the NNP. So what they have given? What they have given? The net domestic product. Okay, we have to find net domestic product. So NP is the same. Here also NP is the same. Okay. Now difference is that domestic to national. We have to find the value of a domestic from the national. Okay. And how to calculate the domestic value from the national value? Here, see the vice versa case, right? We know the NDP and GDP. Okay, net domestic, NNP. Here we are dealing with the, see here, I will repeat here, NDP we have to find from the NNP. Only domestic we have to find from the national. So basically, see here, the NNP is nothing but your NDP. I am right, just reversing the order. Okay, now the second, first and last are same. We have to find, suppose N for national and D for domestic. So we have to find all the product by the nationals only, and we have the domestic products. So how we will calculate? To calculate the national product, we will add the net receivable from foreign, net receivable from the abroad. That is basically called as a NFIA. That is a net foreign income from abroad. We have to, why we are adding? Suppose one NRI is staying in the USA and he is Indian. Here N stands for nationality, N for national. So his income must be added. That's why the net foreign income from abroad we are adding to calculate the NNP from NDP. Now reversely, we have to calculate the NDP. Just rearrange the equation. NDP is equal to NNP. Here it will become minus NFIA. Okay, this is our answer. So what is this? This is our answer. Okay, now the next question, question number 19. The base year of a calculation of a GDP has been changed from 2004-5 to. So it is also important because these changes are very important. They are recently asking the changes. So you have to point out, you have to bring that the recently the GDP calculation base year, before it was 2004-5, now it is changed to 2011 and 12. Okay, why I am not giving you the explanation of rest of the MCQ? Because you will get confused. Just remember, from 4-5 to it has been changed to 11-12. So just remember, plus 7 years has been increased. So in this fashion, some tricks you can easily remember. Okay, plus 7, you can easily remember plus 7. Now question number 20. See, the question number 20, the GDP can be calculated in the following ways. How the GDP calculated? First option, expenditure wise, income wise. Expenditure wise, product wise. Expenditure wise, income wise, product wise. We all know, right? So this is the correct option. Okay, so expenditure wise, income wise, region wise is not correct. So third option is the correct option. Okay, just a very easy question. Now question number 22. When GDP is calculated on the basis of some base year, that is called, when it is a base year, I have already told you in the beginning itself, when we are calculating the GDP at a base year, that means it is called as the GDP at a factor cost, market price, constant price, current price. I have already told in the beginning, base year is nothing but your constant price. It is at a constant price. During first case study we have discussed this. Okay, so you have to mark a constant price. Okay, now the second question, the term green GDP refers to. What do you mean by green GDP? See the options. Major contribution of agricultural sector in the GDP, the GDP calculation that takes into account of the environmental factors, GDP which take into account of the agricultural data by giving extra weightage, and none of the above. So friends, remember here it is a very important question. The recently green GDP has a very more importance while calculating the GDP, because some developed country are ignoring the green GDP. That's why IMF has given some guideline regarding the green GDP. So green GDP is nothing but the GDP calculation that takes into account of the environmental factors. Okay, not agriculture, not even fruits, or not any extra weightage. Okay, just remember, it is that means you should not progress at the cost of environment, Okay, environment should be considered. That's why just remember, GDP green is nothing but the environmental factors effects. Okay, now question number 23. GDP does not reflect the total income of a country if a country is a dash economy, such as a few Southeast Asian countries. They are asking GDP is not good for which country. That means for GDP will not reflect the total income of a country if it is a first option mixed economy, export oriented economy, import oriented economy and controlled economy. So friends, remember, GDP is not suitable for the export oriented country, okay, because it does not reflect the income, of, suppose this is the America, and one American is staying in India and producing here, but this will not counted in the GDP of America. That's why it does not consider the income, it does not consider the total income of the country. That's why, remember, GDP is not suitable for the export oriented country. Okay, then what they will do, they will adopt the GVA, that is gross value added. Okay, or they generally not adopt the GVA, they will adopt the gross national product, because their nationality is important here. Whether they are staying, they will contribute to their country. Okay, GNP will preferred in the export oriented country. Okay, remember, GDP is not preferred in the export oriented country, GNP is preferred there. Okay, now question number 24. The gross domestic product at market price is calculated as. How GDP is calculated? GDP is nothing but the, see, it is GVA plus a product tax minus subsidy, GVA plus product tax minus subsidy at market price at base price, GVA at a factor cost plus product tax minus subsidy, GVA at a market price minus product tax plus a product subsidy. So basically, see friends, GVA stands for the GDP is nothing but the it is the GVA at a basic price plus the taxes minus the subsidy. See, GDP, we have to find the all income here, right? That means we have to find the gross domestic product. So whatever the taxes we pay, it should be the added in the GVA, right? The taxes should be added and subsidy should be subtracted. Okay, so that's why it is called as the, it is the option is the second option, that is GVA is at a basic price plus a product taxes minus a subsidy. It is basic definition for the GDP at a market price. Okay, and now see, one shortcut I will tell you. GDP at a market price, forget about the GDP and GVA. See here, what is a market price? Market price is nothing but your basic price plus you will pay some taxes while buying and you will subtract some subsidies, right? Basically, a market price is nothing but the your basic price plus your taxes minus subsidy. Okay, so you have to mark the second option. So here take care about, I am confused between the second and third option. So okay, so this question we will take in the doubt clearing session. I think it should be second or a third, because GDP at anything at a market price, anything at a market price you have to calculate, you will add a tax and subtract the subsidies. Okay, this is the basic funda to calculate the market price, right? So I think I am confused between second and third, so we'll discuss that in our telegram group, question number 24. Okay, so out of these two, one is the answer. I am not able to recall exactly it is basis price or the factor cost. I think it is a price. I think it is a basic price plus a product tax minus subsidy. Because why? Because we have to find the at a price, so here it should be the price. Okay, not a cost. So this is the this is the most correct and correct option. No need to discuss further. Okay, now question number 25. GDP at a factor cost is. Now they are asking at a factor cost. Okay, here firstly they have asked about the price. Now they are asking at the factor cost. So what is at a factor cost? GDP. Now see here, for 25th GDP at a factor cost. Here I have already told you the market at a market cost is equal to the factor cost plus you will add tax minus subsidies, and we have to find factor cost. So factor cost is equal to market cost minus tax plus a subsidy. Okay, just rearrange the equation. How to remember? It is very easy. So find the option first. GDP. So what will be the option? GDP at a market price. Here should be market price. So GDP at a market price, GDP at a market price minus taxes. So minus taxes plus subsidy plus subsidy. So this will be our most correct option here. So this is the basic I have told you, but the correct formula that GDP at factor cost is nothing but the market price. GDP at a market price minus indirect taxes plus subsidy. Okay. So in the 24th question, see, by comparatively we will study. Right. So here for 24, this is the correct option. Just rearrange that, you will get answer for that also. Okay. So just rearrange, do it yourself, and write down 2 times. Write down 2 times in your notebook so that you will not forget. Okay. How to find? I will tell you. Market is nothing but your basic price or cost price, plus you will add the taxes, because in market, at a market rate you have to pay the tax, and minus subsidy. The whatever the subsidy the producer will get, definitely he need to subtract from the price. So basic funda is this. You just rearrange the equation and try these 2. Okay. Now, so here GDP at a factor cost is nothing but the GDP at a market price minus tax plus a subsidy. Okay. So you will get exact costing. Now question number 26 we will discuss. Which of the following statement is not correct in the GDP? First option, it is aggregate measure. Yes, it is aggregate measure. It provides information about how the GDP is distributed among the population. Whether it is providing that information, it is not providing. It is just giving the idea that how much goods and services is produced in the within a territory. So it is not giving idea about the distribution. So it is not correct. Third, the per capita income does not provide information about the distribution. Yes, it is correct, because in per capita income we directly divide the GDP by your population, so we cannot come to know that about how it is distributed. So it is correct. Higher the GDP does not mean that round prosperity. So we know that a higher GDP does not say that your country is very good. It should be support. If it is supported by Human Development Index, then we can say higher GDP supported by HDI will be around prosperity. Okay, but here half statement is given, so this is not, that means it is a correct. Okay, so what is the, you have to mark that not a correct statement, that GDP provide information about GDP how it is distributed, so it is a wrong statement. Okay, this is you have to mark. Now question number 27, in the context of a GDP, the value of a today's output at a today's price. See, very easy. Today's output, today's price, that means GDP at a current price. Okay, very easy. Current, today, so current. Okay, now question number 28, the factors of production are, this is important friends. What are the factors of production? Land, labor, capital, asset, machinery, money, land, labor, capital, plus the entrepreneur. This is important. Land plus labor plus capital plus entrepreneur, or we can say land plus labor plus capital plus management. Okay, both are correct. So here you have to mark a third option. Okay, now very easy. Remember, this is important question. Remember, that is very, very important. Now question number 29, GDP is calculated on which basis? This is also important. First option annual basis, second half yearly, third quarterly, and fourth A and C only. So friends, remember, GDP is calculated first quarterly basis also and annual basis also. So we have to mark A and C only. Okay, remember this, you have to remember, you don't have any option. GDP is calculated on quarterly basis plus annually basis, and it lags by 2 months. It lags by 2 months. In previous question we have discussed. Now the GDP is supplemented by dash dash. It can provide a better picture of prosperity of a country. When GDP is combined with the Human Development Index, it gives a better picture of a prosperity of a country. So what is the option? You have to mark a third option. Okay, not a per capita, not a saving, and a GDP. Just remember GDP plus HDI. Write down, so you will easily remember. 3 letters, 3 letters. Okay, in this way you can easily go. Now question number 31, under the expenditure method, for calculating GDP, the capital investment in the physical asset such as infrastructure, building, equipment, machinery, but not the investment in the financial product is called as, see, consumption, gross investment, government spending, any of these. So friends, remember here, whatever is the, see, the spending on the infrastructure, building, equipment, machinery, all, but not in the financial product is called as the government. It is called as the government investment. Okay, for 31st it is called as the government investment, because government generally invest in the infrastructure, building, right, and plant and machinery, but not in the financial product. So it is called as the government investment. Basically this is our I. When we solve the by expenditure wise method, C plus I plus G, so they may give, instead of directly the investment, they will give the investment in the infrastructure. Here how to find, here is the word, see, here is the word investment itself, so you can easily judge this is the government investment. Okay, in this way also you can judge the answers. Now question number 32, what is a green GDP? Again the same question. Achieving more than expected growth, not. Including vegetable and fruits in the GDP calculation, it is not. Developing models that can upgrade country environment, we are not going to develop any model that will upgrade the country's environment. Okay, the measuring the efforts in the GDP that upgrade our environment, we will take some efforts in terms of the GDP so that we will upgrade the environment. Okay, we are taking the efforts in GDP itself, we are not developing any model. Okay, so fourth option you have to mark as the correct option. Okay, now here, now 33 question number 33, the market price is dash dash price for which goods or services offered at the marketplace. So friends, market price is the first option. What is, basically they are asking what do you mean by market price? Market price is also called as first option, nominal price, economic price, marginal price, deficit price. So remember, market price is also called as the economic price. Okay, it is also called as the economic price. Now question number 34, the data for the new series of a GDP is calculated on dash dash company. That means in the new series, what is a new series? We have discussed, it is Ministry of Corporate Affairs 21. In that, how many companies data has been compiled for the GDP calculation? Previously it was 2500, but right now the government is taking the in account of a 5 lakh companies data for compounding the GDP. So remember just a figure 5 lakh. Okay, now question number 35, the government has made the following changes in the methodology for computation of a GDP from the 1415. Okay, what are the changes? So friends, when the NDA government came in the power, they have changed the GDP calculation method. They have changed first, what option they have given? Market price to cost price. Cost, see, the moving from market price method to basic cost method, they are moving from basic cost method to market price method. So second option is the correct. Okay, not the third and not the fourth. Remember, just remember, because I am not explaining all the options, because this is one liner MCQ. You have to just remember the points. In 2014-15, government has changed from the cost method to market price method. Okay, what is cost method? Base year to they are changing to the current year, basically that is market price. Okay, what government has done? They have changed base year to current year, that is cost method to the market price method. Okay, very easy. Question number 36, the gross national product GNP is calculated as. So I have already told you how to find that. See, the gross national product is we have to find from gross domestic product. So what we are doing, we GP is same. We have to find the net. So we have to find, sorry, here N stands for nationality and G stands for domestic. So we are considering only the nationality. Okay, so while considering the nationality, what we have to do? We have to subtract the outflow. See, the GNP, we have to consider only the national's income. We have to consider the national's income. Okay, so what we have to do? We have to subtract the net income foreign, that is the term we call it as a net income from abroad. Okay, here, see here, GNP we have to calculate, and from the GDP we have to calculate. Nationality, we are taking the count only the nationality, we are taking count in the nationality. But in GDP we take all Indian, American, but they should produce within that within a proper that country, right? Nationality is not important. So here what we are considering only nationality, right? So what you have to do, we have to consider only nationality. So here net income outflow to the foreign country, whatever the foreigners in India, suppose one American in India is producing something, but we are taking only in the count nationality, that's why his income should be outflow, should be subtracted. So it is a GDP minus outflow, okay. So first option will be your correct option. Okay, now question number 37, the gross national income at the market price is calculated as. Question number 37, the gross national income at a market price. So friends, I have already told gross national income, that is a GNI we have to find. It is nothing but the GDP, right? And we have to take count only the nationality. So while calculating GDP, GNI, we will add the taxes plus subtract the subsidies, plus we are calculating only the national, whatever the national Indians. So if Indian are coming to back to the India, then whatever the property income from the abroad, that will be added, and the compensation to the employees receiving from abroad will be added. Okay, but the tax add and subtract subsidy is very common. It is very common everywhere. You have to just remember important thing, GDP at a market price, plus a tax minus a subsidy, plus whatever the income, what is basically it is income, whatever the income to the Indian from abroad. In this way you can remember, for example, it may be a compensation, it may be a property income. Okay, so correct option is the second option. So in this way 37 question we have completed. So friends, you will have to subscribe our YouTube channel Bankers Zone. Again, you have to join the Telegram group. Okay, if you are using the Telegram, you can join the Telegram group. We are having Telegram group, and the name of Telegram group is CAIIB Bankers Zone. For that you can search on the Telegram @CAIIB PZ, and our Android app is also available from Play Store. You can download the Android app for the preparation. So friends, all the best. We will continue our discussion in the next chapter.